So the goal for this is just to have a free-flowing conversation about markets, what's happened that we think is notable, and what we're thinking about, not in the next few days, but over the next 1 to 3 months that we really care about. And so to me, I think what happened is that we got a Fed chair. That's new. I think what's happened is we saw some incredible volatility in the commodities space, in particular in metals, but also energy. I think we saw some real change in the way tech companies, the outlook for tech. And I think we saw a massive move in cryptocurrencies. And so since we last spoke, I think a lot of things have happened. When I look forward, the type of things that are still on my mind that were then on my mind remain the way the Fed is going to operate, what matters to the yield curve in terms of issuance and supply, the path of the economy, which is always important, the Supreme Court decision coming maybe as early as February 20th, and this ongoing theme that I keep coming back to that really hit home this week with tech earnings is how is the massive capex spend that the entire economy is resting on going to be funded? And I guess the last thing that's the most important thing that I am thinking about right now happens in 5 hours. Go Pats.
Right on, brother. By the way, that sweatshirt looks purple.
It's so old.
That's a good one, though. That's the old school.
Yeah, I think it's washed out.
Nick, what are you thinking today?
Well, like obviously in our last meeting, like we talked about the Fed chair, and one of the things that we got right was that we just talked about the dynamics of if they pick Hassett, the steepener, the effect it would have on markets, and why he wasn't going to be the pick. I think a lot of us agreed Waller would be the better pick, and then he came in, actually dissented, which a lot of people looked as like his attempt to get the job. I think the guy's been the same forever, so I give him the benefit of the doubt. But we ended up getting Warsh, and it's like like a middle ground type pick. It's not that exciting. It's not detrimental. Obviously, people got the idea that he's a balance sheet hawk, which is he? Maybe. I seriously doubt that anyone is going to come in and just try to disrupt the momentum of the market, or just going to come in and say like, hey, I'm bringing the balance sheet down. Like it's not a realistic thing. If he's going to talk about that, I think we're talking years in the future as this like slowly comes out. And then like we could discuss if interest rates cuts or hikes are really as effective as they have been in the past, or if they're doing what they're meant to do. So it's like he's probably going to come in, he's going to be an interest rate dove. Maybe later he's a little bit of a balance sheet hawk, but I'll believe it when I see it. Usually people talk big until they get in the chair, and once you start getting really, and it's your turn to make the decisions, it's not so easy as it is to just talk from the outside. So I think that obviously we had a massive BTC crash, and actually me and Jimmy, we stepped in front of that a little bit trying to catch the dip, and we did all right. It was a little scary overnight when it went to 60.
Wait. What did you get? I got 69,420.
No, we did just under 68 in IBIT. So, nice. But I don't know because I don't really trade. I look at BTC and then just trade off the IBIT. But
right. I think that's the easy way to pay to buy non-physical BTC. Yeah. I have no problem buying paper BTC with IBIT. Yeah. So I actually bought IBIT too, to be honest.
Yeah, no, and I actually have owned BTC. I looked into it. It was one of the first. They reached into MMA because it was a growing sport, but it wasn't as expensive as like a football or something like that. So I've been in BTC for a very long time. I have a laptop in my closet that has it with the Tails hard drive on it. So like I've had it for a long time, but that flush without a major like FTX type thing, people could say that MSTR, the value of the stock crashing that much is enough. to get that final flush. But that was by far the largest down days we've had without a major event, that like some type of external crisis to bring that down.
So we both bought it and then saw it fall over 10% from where we bought.
Yeah. But now it's back over our initial price and whatever. So
I also think that like at moments like that where you're like you're watching for these markets to make like a technical bottom, they're approaching these areas where you think they're gonna make a bottom, and I'm talking about XRP and Ethereum, and they were all coming to these come to Jesus moments, including IBIT was coming to a come to Jesus moment in that 37 area. When you're like, that's one of those moments where you really are like buying at the wake to sell at the wedding, and you have to expect maybe a little bit of a slippy, like real quick, and not exactly catching the bottom. And where you get one of those wicks where you almost have to just shut your eyes and know you're in the correct area to do it. And I think that's what we got in crypto. That was a terrific washout and a quick recovery into an area where we were all really interested in jumping in. Yeah, if you had weak hands and you put your stops in right away, yeah, you didn't catch it. You got washed out in that last. But that's what markets do at the bottom. That's why they leave those wicks. And they're usually super fast, and there's not a lot of volume that goes on. It's single prints at the bottom. And this had a lot of attributes of a bottom. And the bigger question here is I was always under the impression, or always thinking like, this shit's not bottoming until crypto bottoms. Crypto may have just bottomed there. They may have put in a decent low, a durable low. So, and then you look over at the tech charts, they've all been decimated, but a lot of those charts were hitting really juicy technical areas as well and held up decently in those technical areas. So the question now is like, did we put in a low there at the end of the week, or is this just temporary and we need to like do more work at those lows?
So help me with that. So I hear you as it relates to it being a risk asset and it has to bottom for everything else to bottom. But then I look at like gold and silver have been one direction. Bitcoin has been another direction, and really equities haven't done shit. Like it's been 3 months for equities chopping. So I just have a hard time. Listen, we certainly bounced. We bounced, 200 handles from a similarly timed low on the S&P. But it's not like we're a tiny bit off the bottom of a big drawdown. We're just right in the middle of the range again.
Yeah. Well, right. I think in general, when we talk about markets, there's two ways to work off exhaustion, right? One is time and the other is price acceleration. So it's like we didn't get the price acceleration, but as you said, if you just bought SPY, you're in the same spot you were 3 months ago. So there has been somewhat of a consolidation where players, so the time itself is where the chopping is of the positioning. The people who are getting out or selling, there is the time does matter, and the fact that we didn't do anything for such a long period of time, that can take away from the price acceleration needed to the downside. And then also we've had this rotation, which we track a lot of breadth metrics in DSMMA. We track a ton of the market structures, options, all kinds of stuff. And there were days where we were down big on the day, and 75% of stocks were up on the day. There were days when the breadth was recovering dramatically, and so we're getting like 10% more stocks over the 20 EMA while the market is going down. So we have had this violent rotation, and even though the big stocks, the market cannot go higher without the big stocks.
Which just tells you that if Amazon, if Google's up, but it did come off its earnings. If Amazon, if Microsoft, if Meta have made durable bottoms, what's going to take it down?
Well, I don't think I think all they need to do is stall, and then the market could go back up. But we're in a very difficult market where it's like when we're talking about the market going up, we're talking 7,200. We're not talking 7,700. So it's a very hard risk reward to like load up here unless you're dip buying these tech names. And as far as the tech names go, like Amazon looks a little bad after earnings now, but it was like consolidating. Microsoft down 30%. People are going to eventually rotate back into that. And then we have yeah, like you can't not own Microsoft at 30% down. It's something that just people are going to go to. And then we have to talk about, it's similar to like Warsh the balance sheet, right? Like these guys are saying astronomical numbers, but I think this is the peak of the capex numbers. And even Zuckerberg in his earnings call, he even said this is peak spending for us. Like we're not going to spend any more than this. Like this, and they did the same thing when they did the meta bottom, and like I was early on the meta bottom. I bought it at 100 and it went to 88, and I felt like the biggest idiot in the world. You look at that chart now, it looks like this much I was in a drawdown. So it's like, are they going to spend this money? They can switch that in a second, and 100 billion can become 50.
Well, that speaks. So the way I look at tech right now is you have semis and everything else, and the software stocks. I know they've been decimated, et cetera. But what I'm talking about are the big ones, like the big stocks, NVIDIA, Broadcom, TSM, Taiwan Semi, versus Microsoft, Google, Amazon, and Meta. And when I look at those groups, let me be clear. Those CapEx numbers, I thought CapEx, they were guiding CapEx to be peak spend last quarter. Those numbers were blow away large CapEx. That's not, maybe he says it's peak. I didn't hear him say that, but holy crap. That's an unsustainable increase, but it just keeps coming every year. And the point I'm making is markets didn't love it. Markets for the first time, they have penalized Meta for big CapEx, particularly when it's been stupid big CapEx, like for the metaverse. But they didn't reward these stocks, none of them. And even Google, which is the odds-on favorite, they didn't reward any of these guys. In fact, the ones they did reward are the ones who aren't doing it, like Apple, which was strong for the week. And briefly, they rewarded the semiconductors, but those things aren't going anywhere. Haven't gone anywhere. They've certainly gone a long way over the last 3 years, but you're not seeing that sort of liftoff, and you should, because they're the beneficiaries of all this spend. So it's a curious market on equities right now. I do think it matters that these guys are going to stop share repurchases. They did. Meta literally canceled its share repurchase for Q4. Google repurchased 1/3 of what they normally do. Those are big numbers. Amazon doesn't even repurchase, so they're already spending their capex spend. This massive capex spend is coming from free cash flow, which is they don't have any more. They're using it all. They're going to have to issue. So I continue to wonder if that's the overhang on these stocks. Now we get a lot of semiconductor things, and I think the people are going to be set up for good numbers. How can you not be?
I can't.
I own some out of the money Nasdaq calls that I'm gonna hold them through the next quarter, because they were, for one, dirt cheap. Like you can own upside, 10% upside, 2-month, 3-month calls for nothing. Okay. So why wouldn't you?
Yeah, I had like a little brain fart old moment there. I'm getting old, but what I was gonna say is, like, jeez, I'm like losing my mind here. I'm really losing it. The buybacks. When we're getting rid of the buybacks and favoring capex, I think is a long-term benefit to the companies and to get away from sort of financial engineering. But removing that price insensitive buyer is very detrimental, as you said, to stocks in the near term. That's just what I think. I've never been a fan of buybacks.
Clear. I think the shift is clear. These companies, none of them have acquired well. And so the premise that they are going to use this capex well, maybe they will. But it's not like they have a great they have unbeatable brands and have been capital light for decades. And now just because they happen to have these great brands, we're now going to give them credit for being excellent stewards of heavy capital spending businesses. I'm not willing to do that. Now, that said, they could. Like, you don't want to short these great companies just because they're shifting from, but you lose the price support of buybacks, which is unquestionable, not only for the stocks themselves, but the market breadth in general. Like, when Apple buys their shares, the seller has cash and they reinvest in SPY. They don't reinvest in Apple because that's what they literally just sold. So they reinvest in SPY. So the buybacks are a big positive force in multiples. And I don't know. I think you're right that it's generally. I don't even know. I don't even know if like companies are good at capex. I don't know.
Right now,
we sure.
I guess the
question is how quickly will the market credit it?
Right.
And how quickly will
it was definitely met with some skepticism last week. None more than Google, because Google put up like decent numbers and then announced like crazy capex and couldn't hold a bid, and then even in their bounce off their lows are still trading under where earnings came out, still trading under that like 330 area. So they could have easily, with a rally on Friday of its magnitude, could have easily gone shooting up to 340, and everyone would have been like, oh, okay, all right. That was like what Apple did on its earnings. It initially traded like shit, but it's traded really well since.
Right.
But that Google was like that. No, it didn't finish.
People are just hiding. Apple's just. I would assume Apple will do the opposite of what the rest of the sector does right now.
Mm-hmm. So you know what? Like last week was almost like a year's worth of trading and market moves condensed in a week. I was looking at charts and I'm looking at metals earlier today. And I was like, well, last week when we made the low, and then I was like, holy shit, actually, that was Sunday night, like when we made the low and they got shelled and stuff. So like the beginning of the week was all about, holy Christ, what is gold and silver doing? And then we moved on to crypto, and then equities, then there was like a year's worth of moves in there. So as Friday ended, I'm going to put metals or any of the ancillaries aside, just focusing on where the indexes ended. We came up 200 handles into resistance. A lot of the charts that got murdered in tech did the same thing, kind of came off really solid support areas, and they're down 25-30%, getting smoked into them, and have bounced. That doesn't necessarily mean this thing's over. That maybe it's the next move that's going to tell us whether this is going to be over or not. There's no fucking way the only chance we had at extending Friday's gap and go. Gap and goes do happen, and I think Friday's gap and go was basically technical. Everyone was looking at everyone else. They're okay. This stock's popping. It's holding these lows. Oh, crypto's held their lows. They're extending. Everything just came up technically. There was no news to pop us 200 handles higher. So the next move will be either I'm looking for like a B wave back to the ORs, the opening ranges, back to the swings in cash, SPX and NDX 6850-ish. Now, if we everything needs a little bit of a pullback from here. If we can pull back and we can hold those levels and everything seems copacetic from there, then yeah, we could work our way back up to all-time highs, extend from there, have the energy to do it, have the bullshit to do it. But I think that what you're saying is that I think that the capex, like what are they doing with capex, will constantly be seeping back into the conversation, which will never allow us a full clean breakout like everyone is looking for. Yes, it can. We can exist on fumes, we can exist on technicals, we can make moves in the meantime as we wait for these questions to come to fruition. But we're really not going to know. We're just going to have these promises of like, oh no, everything's great. They're spending trillions. We're good, and we're going to have to deal with the fumes to the stock market that bullshit gives it, and until the actual rubber meets the road, and we find out the numbers.
So we got some in the near term. We've got some data. It's a big data week. We've got CPI. We've got jobs, the delayed NFP. Then we go into NVIDIA earnings toward the end of the month. We go into the SCOTUS decision. Let's step back a little bit from what's happened. Oh, we also get 3s, 10s, and 30s auction next week. Let's step back from the immediate. And what are you guys really thinking about out 2-3 months?
I guess in the first roundtable I talked about like raising cash into rallies and buying dips, and I still think that this market doesn't present a good value. I can't think of like a value opportunity to really chase the indices themselves that much higher. I think the caps are essentially capped. Like the gains are capped. So I really think that it really, I hate the term because it's on CNBC and stuff, but it really is a stock picker's market. It really is where you're going to buy on the yield curve. It really.
Yeah, let's talk about things other than stocks. You've had a view on the Fed and cutting interest rates. That I think we got an interesting last week. We got a mechanical bid for twos, even though the economic data was mixed. There was a Challenger was weak, but Challenger's a joke versus other data. So we got a bid on twos that was seemed entirely due to the equity sell-off, but didn't reverse.
Yeah, it sold off a little bit. It reversed a little bit. Yeah, but
right. Well, if you think the Thursday night spike up to was real,
yeah.
It reversed a lot. But versus Thursday's close to Friday's close, it was 1 or 2 basis points.
Yeah.
And it was up 6 or 7. So
it held Monday's spike like high.
Right.
Yeah.
Right. So you've got Warsh. I've sent around a lot of things to clients here, you guys, about the difficulty that Warsh is going to face convincing assuming Powell and Cook are still there, convincing the guys to lower interest rates. Is there a possibility you get Powell to lower interest rates?
I think so.
He's got 2 more meetings. There's a shitload of data. We know the economy's, well, certainly expectations for growth are through the roof, and inflation is sticky high. But is there a case for Powell cutting rates before he's replaced?
I don't think so. Not at the moment. I don't think so. The numbers don't show it, and spite. He's not moving. Why would he? I think that Warsh is going to come in and
the reason. So let me just say, there are 4 voters that are going to vote cut at every meeting. They may not dissent, but there are 4 guys that are going to vote cut. That's Waller, Myron, who gets to stay on until Warsh comes in, Bowman, and Williams. They're going to vote cut. They only need 3 more.
Yeah.
Wrestle people to not cut if the numbers say cut. So I guess the question is, do you guys see any possibility the numbers say cut?
Well, we look at the jolts. The jolts was pretty bad. It missed a lot to the downside, and the fact remains that
could we get a growth scare? That's what we haven't had for months.
Yeah,
is a growth scare. The last growth scare we had was due to tariffs in a year ago. We haven't had a growth scare since. Yeah, not even a peep of a growth scare.
If growth scare is necessary for them to cut rates in the near term, I think you don't get it. But I don't I don't know if I agree that growth is the only thing. I think that inflation is going down. If you have a slightly weakening job market, I think that that it's there to bring the interest rates down. I really do. And I think the bias is still for them to over time cut 2 more times at least. So I think by the end of this year, I wouldn't buy H6 today thinking that we're going to
Yeah,
have
two doesn't float my boat. Two's
but
not worth anything. Is there a four is there 4 cuts in 2026 scenario?
I could see 3, maybe not 4. I could
See
easily
three,
Inflation would have to really crater, I think.
and it
Well,
could.
I think it has. I really do. If you look at the charts, you look at the history, you look at whether I just don't see it. And if I look at my own personal spending, things have gone down a lot. I went to a restaurant yesterday. It was $70. At peak COVID, I couldn't get out of a restaurant for under 140 with the family.
Right.
You know what I mean? Like all my bills, like every single grocery bill, everything has gone down. Is it higher than it was before? Of course it is. But like
Don't you have to think it's the shelter component at this point that like drags us down?
Well, it's not if it's going to. Just the way it's designed. The way it's designed.
It's definitely the numbers are going to drag us down. The question is are we going to get a big tens rallied to what 410? I get the lows. Can you get mortgage rates haven't really budged since the Fannie Freddie we're going to buy 200 billion of mortgages thing.
Yeah.
So I don't think we're getting any stimulus from interest rates. We're saying we're not cutting 3-4 times. The long end's weak at best, and mortgages are being supported by this buying. You're not going to get housing loving that.
Yeah. Well, if you ever wanted to see someone shoot themselves in the foot, this Powell thing is what did it. They had a dovish Fed, and they had sort of the way they were meant to go. And then they come in and do this investigation of Powell. They're going to push back the confirmation stuff. If that was the goal to bring mortgage rates down, you couldn't have done something worse. And so in my own trading, like once they did that, I was like, geez, now like I really have to be careful with this near-term interest rate stuff, and I have to push everything back. And we had some H6 calls, we rolled to H7 and the SOFR. We moved out into the 2-year. You have to really start extending more because this Fed fight it couldn't have been a more whoever made it certainly doesn't understand the bond market. And when we go from there, I know Bessent wasn't part of that.
It felt like it came from Pulte, I think.
You know, whoever did it did throw a wrench into the process, and I do think that it has hurt the case for more cuts than it was previous before that happened.
Right, because if it's a tweener, it's a no. And now that it's like, hey, before they would defer to easy even if it was a tweener, because there's always a few things you can point at. But if it's a tweener now, the answer is a hard no. And it is. And he fucked it up with that policy. That was a terrible move. Sorry.
So how about metals? We've had this ginormous move. I'm long-term bull of gold. Don't trade silver. It's just put that in context in terms of like longer-term investment sentiment. Do you think there's a possibility that this thing just really washes out and unwinds people, or is this just a dip to buy?
I think it's a
no. Go ahead, sorry. Jimmy. Go ahead, Jimmy. No, go.
Personally, for me, I think this is a dip to buy. I don't think this is a washout yet. As much as it did get parabolic and it took the elevator down the way they do.
Yeah.
But that 44, 45 area, the old OC highs, there was a lot of support there, and it just took out, it washed the sins away. It washed the parabolic part of the chart.
And you guys agree it's probably not, it just had to happen. It's not like we can point at any catalyst you want, but wash on the balance sheet, which is what people are pointing at, just doesn't seem right to me.
Right. You know what? So in a situation like that, it's so combustible that all you need is a match, you know what I mean? And it can be any match. You can point at that maybe as a reason, but I think this was a largely needed technical pullback, way overheated market. But since then, gold has actually been, it put in a higher low on Thursday, and that higher low was like kind of a flushy, wicky low. It looks like an AB wave situation where the C is coming now, and it looks constructive. Like it, I would before I wanted to sell the 125 area and it came like within a couple bucks of I would back off at this point. I think that we could pop up back up to like 53.50 and maybe even back up to all-time highs. It's making decent patterns at this point.
You're not a big fan of metals like strategically, Nick. What do you think?
I think anytime you have a 20+% washout in a few days, the excess was removed. You know what I mean? I don't think you need more than that when it comes to just the level, especially when we're talking about an asset like gold that is not really something people are flipping. That those people got washed out that were the speculators, the people that needed to get washed out, I believe got washed out there. And so now it's an investing story. That the only issue I would have investing in gold here, right, besides from like a systematic process is we don't have the time factor, right? And I talked earlier about how we can have price acceleration or time, but very rarely do you have such a down move that recovers all the way back to the top so fast. So I could see like a choppy like atmosphere for the next couple months, develop a base, but I see no problem investing in gold long term. I would not ever invest in silver. I just wouldn't. And in general, like we're running into that. Gold is gold, and it's meant to be sort of a debasement hedge over the very long term, and it goes through these periods of radical acceleration, and then it just stops for years. So I think we could easily enter into a period where we chop around in a large range now, $500, $800 range, but like would I play it as like this to all-time highs again? I wouldn't. I would stay away from it. But would I slowly invest in it on dips? Yeah, I think so.
So how about I think it's been under the radar though. The natural gas spike was typical. Oil's up quite a bit from the lows. The economy's strong, presumably, though it's unclear to me it's strong in a way that's bullish oil. But oil's doing well. Geopolitically, things are fairly quiet. You've got the Venezuela supply, which that situation's gone completely quiet, but presumably we have access to supply and he can fill things. Russia, Ukraine's quiet. We've got some stimulus coming out of Japan possibly overnight with the election, which looks like it's going to go as generate a supermajority in the lower house with the coalition. Maybe you get maybe that's driving a little bit, but energy prices are up quite a bit. We've got the inflation impact. We've got the tax on consumption impact. It's doing well. At the same time, is it really going to run away? What are you guys thinking? Jimmy, you've been an oil trader all your life. What are you thinking on the energy?
I think that as long as we keep building this armada, bearing down on Iran, there's going to be that geopolitical risk bid there. And I think that bid is now, there's a lot of guys out there that don't look at moving averages on oil or on a lot of commodities because they over time, they are bullshit. But there are certain times where the nuances, they do matter a little bit. So the 200-day, we came up and tagged it, and that was the Jan high around 62.35. And then we've come back and held it, and we're chopping now. And we haven't spend a lot of time above the 200-day in the recent years in crude, but we're holding it right now, and it just tells me that like no one really wants to sell or take a short position in crude as long as that like spiking geopolitical risk is out there, which it is. And you know what happens on these headlines? It goes to 70. So everyone wants to sell it at 70, and then if they fuck up the actual attack or it doesn't go well, most of them do, because most of them are almost orchestrated, as we've seen with Iran. It's like we don't really want to fight each other, but every now and then we have to do something. 74, 75 is the top of the panic. And I think everyone is kind of waiting to sell those areas on a spike, but they don't want to get caught in that spike here. So we're just like, this is a way station, but above 62, above that 200-day, it's significant. Things can build from here.
So we've had high realized in equities, single names. We've had solid dispersion, but elevated implieds in SPY. We've had big moves in NASDAQ. Even the dollar's starting to move a bit. Oil's moved. Natural gas has moved. Rates are still pretty tame. Vols in equities seem extremely elevated to me.
Right. And that was the one thing that I was thinking today. I guess because I was thinking, wow, if I'm seeing all these little clues like, oh, that looked like that bottom, and that looked like that bottom, then why isn't like VIX back down like under 18? Which probably speaks to the fact that where we are in this move, it's not a guarantee that it's over. It's not a guarantee that these lows are in. It's not. We came back up to 200 handles into resistance, and we have no support below. A lot is still to be written in this move. We have to go back and hold those lows, or the only thing that could get us over this area to extend off that Friday ridiculous move would be a headline, would be some gotcha thing.
Like what?
And I don't know what that would be.
I can't think of what would it be? I guess you could.
Well, I was thinking, what if Powell resigned? That's one question.
Mm-hmm.
I don't know what I mean.
I don't know if that would be good for anything. I think that would be that would make.
Yeah, maybe not. I'm just throwing,
I don't know.
I don't know. I'm just throwing things out there.
If I wake up in the morning and Powell resigns, I'm going to be like, I don't think I'm buying stocks. I'm going to be like, wait a minute, what the hell's going on?
I don't think it's really that useful to speculate, but I guess Russia could solve. I don't think that's even worth thing. I guess you could get a fundamental thing. You could get some sort of leapfrog tech.
Right.
Let's say, like, if I could come up with a headline or come up with a reason that stocks are going to go up, you could have a massive blowout in the jobs numbers, and then that it signals the strong economy. The tech starts to rebound, but then you're going to have an absolute meltdown in the bond market. So it's going to be a different type of.
I guess an ice cold CPI.
I can't really. That's what I said.
That's
why I was saying that. I personally, we bought stocks into this sell-off. I think we're going to make money on those stocks. I like Microsoft down 30%. I own it. I bought a lot of stocks in my own accounts as we were selling off. But I still think that those equity indices are capped at a certain level. And I don't really see what's going to change that in the near term.
Well, then selling 19 vol seems sensible.
Yeah.
Yeah.
Well,
I guess
we can go two ways though until we hit non-farm payroll on Wednesday. We can either hang up here and stay and consolidate on a high plane and hold these gains and rebuild our energy and then go into the number and be ready to explode, or we can dip back to the ORs and put in a healthy technical retrace and bounce off that level and see how vol handled that and see if it creeps back down to the 17s. And as we head into Wednesday and non-farm payroll and take that next leg. But we need to see that next leg. We need to see the next 24, 48 hours action going into non-farm payroll to really have a better understanding, because too many things are like too close to critical areas. Oracle, yes, they bounced off decent levels, but they're not out of the woods. All the individual stocks, Meta, Meta was the only one that like traded decently after earnings, but now that had a shitty response to Friday's rally. There's a lot of stuff that's just not out of the woods yet. So,
So
although, you know,
I got a question for you guys because it comes from the oil discussion of why oil could be bid, and one could be somewhat of a China recovery. We can see copper prices are higher. So when we start looking at the rest of the world, like you said, we have stimulus probably coming out of Japan with the supermajority. If you have a global growth impulse and inflation is not as much of an issue, it could like essentially still be more bullish for the rest of the world equities over the US if that's what you're playing. But that is another positive to risk sentiment. And I was wondering if you guys think that that's actually a real thing. Do you think China's recovering? Do you think that the Japan will buoy that? Or because that's my belief of why oil's not going under 60. It's just because there's a
broad global recovery.
Yeah.
Right. Listen, I think globally you're seeing central banks done with stimulus. Now, is that bullish? I don't know. It means they're done with stimulus. They may begin hiking, and Australia did. Japan, with this thing, is going to see stronger economy if they're able to unleash the darts instead of the three arrows, the three darts. It's possible that you get some real economic strength, but you're also going to get that's going to let the BOJ hike a bit. I guess like the way I think about it is like, does anybody not think the market's going to the global economy first and the U.S. economy fueled by capex is going to be anything other than strong? I don't. It's hard to make a case for a weakening economy right now, and I don't think anyone's making it. I don't think anyone's positioned for it. What shocks me is the bond market just doesn't care.
Well, I mean, I don't know. I don't know if I disagree or if I agree that nobody thinks that like we're gonna. I think most people think that there's a drag on the economy, especially in the U.S. with tariffs, with how the Fed is going, and it's a negative. Sentiment just doesn't seem that positive to me overall when it comes to risk. So I don't know if I totally agree with that. I think from the technical side, I think you're correct. Like if you look at the data, if you look at the GDP, you look at all that stuff. Yeah, obviously things are well, but I just don't see that in the sentiment of what I look at. I don't see it like that. People seem pretty negative to me, especially when you have Microsoft down 30%. You have tech selling off 10% on some of the largest names in the world are down 10, 15% in a day. That's not a very positive atmosphere.
Yeah, there's a difference between how people are positioned and how people's outlook. An important difference, because I was tweeting around the economy is not the stock market,
which is true.
Yeah, it's not true. It's just definitely not the stock market. I think your question was, is the economy heating up? And I think expectations are that it is.
Yeah. That's my fault. I guess everything I say is relative to some asset price, right? So
right. Me too. I think that's the only way you make money. But at the same time, I just
say we see a little bit of green shoots in China. We see a little bit of thing. We see the effects in commodity prices rising, right? Commodities are rising overall. We're seeing it in the softs. We're seeing it in copper. We're seeing it in across. So we are seeing this, I don't know if you call it reflationary because we're but a reflationary bid or something. But
I think it's real growth.
Yeah. So that's a positive. And as far as how far do we have to go down in risk assets to get there, or why is the bond market not moving that much? I don't know. I think the bond market has been a very bad predictor of anything over the last 5 years. I think it's been a disaster. So I don't really know what it's thinking, but as far as that, I'm glad we're long SOFR H7s. I think we're going to get more cuts, but I don't think that's really economically driven. I think that has more to do with politics and where the neutral rate is.
If there's one thing that hasn't changed, or the one risk that hasn't changed, it is the back end. Technically, it's still in its heavy range. The curve to me looks like it could steepen from here drastically, another 20 basis points at least. And that's the part of the curve that they need, that they're most worried about, the backs, and they're not getting the reaction that they want. Even when we were
Worst was supposed to be good for the curve, and we closed 210s closed as steep as they've been.
right, that's not happening. That's still there. We talked about this a month ago, that the biggest risk was like probably the back end dumping and rates spiking higher. It's not off the table. While a lot of these markets just got the shit kicked out of them, and we had a lot of volatility, bonds still didn't like cross any major thresholds to tell you that we're okay. As long as they're under that 116 area.
Look at Japan bonds at JGB futures at all?
Yeah.
Because we're going to get an event tonight.
Yeah. The thing that kind of was strange is that
the Japanese stock market, bond market, asset market has been for almost 6 months now, maybe even a year, my favorite market to own assets in it. If these guys get this thing, you could see some fairly meaningful moves. If you saw yen 160, JGB bonds pushing out to their new all-time high, well, not, but multi-decade highs.
Might as well be.
And right. And the Nikkei continuing, it was up 5% on Friday.
Yeah.
After hours. And the Nikkei just continuing to rip. What do you think that does to the rest of the world? It certainly strengthens the global growth story.
When we talk about growth, when we talk about assets, like one of my main systems uses Japanese stocks versus US stocks as a risk on thing. You know what I mean? Like that spread, that's a risk on spread. So if you start seeing Japanese equities outperform US equities, that's a global impulse, a positive thing overall.
Sure.
But I think but
it's gone a long way as well.
No, 100%.
Are you supposed listen, that 160 level, everybody and his mother thinks that's where they're going to step in, and that's as strong as the USD is going to get. If these guys don't hike while they're doing all this stimulus, 160, you're going to cut through 160 like butter.
Yeah. Yeah, and hopefully it does. Why not? Then we could actually start to look at that long-term yen long again. Let it happen. Let them do what they want to do. That's the great thing about this market is if you can diversify into the other assets around the world, there's so much to do right now, and we have this sort of fractioning into a bipolar, tripolar world. You could talk about that forever and get to nothing, but it's exciting, and it does add a lot of things that we can start to go for on. So you have U.S. dips, you can start buying the rest of the world as the growth impulse as well.
If you saw so we've had a couple of times where the U.S. bond market has puked because the Japanese bond market had puked. We've had a period of about 3 weeks since the most recent event. The Treasury intervened with the Ministry of Finance. Didn't actually intervene, but did rate checks that stopped it. If you start to see that bond market really puke, do you think it bleeds over to the rest of the world?
Oh, I don't know. I really don't. I hate that.
It has.
Yeah.
What we know is it has.
Yeah. I have to assume it will again.
Yeah.
Oh yeah. That's a sensitive area too. Anything for sure.
They own a lot of bonds.
Yeah.
A lot of bonds.
It's one of those things that should it probably, but at a certain point the market stops caring about certain things. The market shouldn't be where it is now. If we look 5 years ago at what we thought QT was going to do, but it seemed to go right through it. So is it going to happen? It's not good. There's nothing good about Japan going through crazy markets, but it went up 5%, like you said. So clearly people.
I think the stock market's fine.
Yeah.
Unless they lose. It's the bond market, the currency market, and how that pushes through to the global bond market. And so anyway, that's obviously that's we're going to end here, I guess. But it's we're at a point where the most current event story tonight, besides the Patriots and the Super Bowl, is the election and then the immediate reaction overnight in the Japanese market.